3 small-cap chemical gems winning the Rs 1.45 lakh crore battery race: PCBL Chemical, Neogen Chemicals and Balaji Amines. India's EV boom is creating a 16BN battery opportunity. 3 chemical players are betting big on next-gen materials. Capacity is coming up fast, but can execution and margins catch up with valuations already pricing in the future? India's clean energy shift is gathering pace, and electric mobility is at the center of it. As per the India Energy Green Storage Alliance, electric vehicle sales crossed 2.3 million units in FY25, with penetration nearing 8% of total vehicle sales. Policy support remains firm, backed by a 5% GST rate, production-linked incentives, and a clear target of 30% EV penetration in passenger vehicles by FY30. This acceleration in adoption is steadily lifting demand for lithium-ion batteries. A joint report by the India Cellular and Electronics Association and Accenture forecasts that India's annual lithium-ion battery demand could reach 115 GWh GWh by 2030, driven by strong EV adoption and growth in stationary and consumer electronics. Supply chain shift, the 1.45 lakh crore opportunity. According to Research and Markets, India's lithium-ion battery market was estimated at $5.8 billion in 2025 and is expected to grow to $16.0 billion, 1.45 lakh crore by 2030. As cell manufacturing begins to localize, the opportunity is widening beyond battery assemblers. Chemical intermediates, electrolytes, conductive materials, and specialty additives are emerging as critical pieces of the value chain. Let's take a closer look at 3 companies that are positioning themselves to tap into this structural shift. 1. The Nanovase Project, PCBL's high-stakes bet on nanosilicon. PCBL Chemical Limited PCBL, a part of the R.P. Sanjeev Goenka Group, is a global specialty chemical company and India's largest carbon black player. The company is currently the 6th largest carbon black producer and the 4th largest specialty black player globally. PCBL operates primarily across 3 multi-chemistry segments: rubber and specialty blacks, specialty and solutions, and battery chemicals next-gen tech. PCBL is positioning itself as a pioneer in the energy storage segment. PCBL's 3-pronged battery tech strategy. It is the first company globally to simultaneously develop 3 advanced technologies for next-generation batteries and conductive solutions: superconductive carbons, nanosilicon, and acetylene black. This project is named the Nanovase Project Nanosilicon. Global patents and pilot validation, building a moat beyond India. The project is being developed in partnership with an Australian firm, introducing a new manufacturing method for the battery energy segment. An 80-ton pilot plant is currently under construction at Palai, Gujarat, and is expected to go live by the end of March 2026. Transitioning from pilot plant to commercial output. Thereafter, a full-scale 2,000-ton commercial plant is planned for commissioning by the end of FY28, post-successful pilot validation with customers. The estimated capex for this commercial facility is between $25 and $30 million. The commercial potential for Nanovase is massive. Margin outlook. Can PCBL sustain its 50% bottom-line guidance at full utilization, which management expects to reach around the end of FY29 or the beginning of FY30? The product is projected to generate revenue of 1,700 crore. It also expects 50% of revenue to flow directly to the bottom line. PCBL has also received a US patent for its proprietary nanomaterial process, and patents are expected soon in Japan, South Korea, and Europe. The company has also applied for patents covering carbon silicon composites and biosourced battery-grade graphite. To drive this expansion, PCBL has formed a US subsidiary and is growing its dedicated business development and application engineering teams. Additionally, trial runs for 1,000 metric tons per annum MTPA of superconductive carbon have already begun. PCBL has commenced work on a 4,000 MTPA acetylene black plant, which is expected to be operational by the end of FY27. These next-generation chemicals are engineered to serve high-growth, modern ecosystems. Key applications include lithium-ion batteries, energy storage systems, EV charging infrastructure, high-voltage power cables, and semiconductor packaging. 2. Neogen Chemicals, the electrolyte specialist. Neogen Chemicals manufactures specialty chemicals, primarily focusing on bromine-based and lithium-based chemistries. Neogen operates primarily across two chemical segments, organic chemicals and inorganic chemicals. Strategic pivot, leveraging lithium expertise for the EV boom. Neogen is aggressively pivoting toward a future-ready portfolio by leveraging its long-standing expertise in lithium chemistry to manufacture lithium-ion battery materials for electric vehicles and energy storage. The company is establishing large-scale manufacturing for electrolytes and lithium electrolyte salts. Gigascale approvals, securing long-term revenue for FY29. Total capital expenditure for this segment is estimated at 1,500 crore, with a revenue potential of 2,500-2,950 crore by FY29. Neogen has formed a joint venture 80:20 with Japan's Morita Investment to globally produce and sell solid LiPF6 salt. The Morita Advantage, a non-FEOC alternative to Chinese dominance. This JV leverages proven Japanese technology, making Neogen the only non-FEOC foreign entity of concern-compliant electrolyte salt plant with established tech outside of China. Also, a new facility on 65 acres in Pakistan is under construction. Commercial production of 30,000 mt of electrolytes is on track for H1 FY27, while 3,000 mt of lithium electrolyte salts is scheduled for H2 FY27. Neogen has already secured long-term commercial supply approval from a gigascale Indian customer for electrolytes and provisional approvals from multiple international clients for its lithium salts. 3. Balaji Amines, the solvent monopoly. Balaji Amines is a specialty chemical company that manufactures amines, amine derivatives, and other specialty chemicals. It is the largest manufacturer of aliphatic amines and methylamines in India. Balaji is the only Indian company to have developed an indigenous technology for manufacturing amines. Solvent dominance, maintaining the lead in aliphatic amines. The chemicals produced by Balaji Amines are essential raw materials and solvents used across a wide variety of industries. Globally, the majority of aliphatic amines are consumed by the pharmaceutical 61% and agrochemical 26% sectors. It is also involved in the battery sector, specifically targeting the fast-growing electric vehicle battery industry. Import substitution, Balaji's monopoly in electronic-grade DMC. The company produces specialty chemicals used as battery materials and fuel additives. To capitalize on the EV market, it added new equipment to its existing dimethyl carbonate DMC plant to manufacture electronic-grade DMC. It is the only manufacturer of DMC in India. Electronic-grade DMC has a strong demand for use in EV batteries. Notably, Balaji Amines is currently the only manufacturer of DMC in India, boasting an installed capacity of 15,000 MTPA. This plant was successfully commissioned on May 28, 2025. Balaji plans to achieve revenue of 2,000 crore over the next 2 years, up from 1,389 crore in FY25. Execution versus valuation, the 2026 to 2030 outlook. Return ratios, including return on capital employed ROCE and return on equity ROE, are not in line with the market mainly due to cyclicality. Valuation-wise, PCBL and Neogen are trading at a premium to both historical and industry median valuations, while Balaji Amines is trading at a discount to both. India's battery ecosystem is moving from concept to capacity build-out, and specialty chemical players are stepping into that gap. The opportunity is real and measurable, but earnings have yet to reflect it. Execution, scale-up discipline, and margin delivery over the next 3 to 4 years will determine whether valuations sustain. Disclaimer: this article provides stock market news for informational purposes only and should not be construed as investment advice. Readers are encouraged to consult with a qualified financial advisor before making any investment decisions.